everybody. It's JG. Time for a little bit of a Friday tea with JG. Today I'm here with Kris Pisha. Kris, go ahead and introduce yourself if you would, sir.
Yeah, I'm Kris Pisha. I've been here with Paramount Residential Mortgage Group, PRMG, for a little over 8 years now. So we've been a top 5 branch in units and volume for that time, and we're here to help people. Our business is service, relationships.
So help me understand, first off, when people are buying houses, most are going through a mortgage lender.
Yep.
How does a mortgage lender just help in general? What is it that a mortgage lender does to help people purchase a home? Because, maybe somebody doesn't know.
Well, they should be doing. There's something that people are doing what they should be doing. So what people should be doing, they should be spending time with people, getting to know what they want and looking for. So asking the questions, getting to know the person, building that relationship. Some people are like, here, I'm just going to put you in this or that. We don't want that. We want to know what you're truly like, how much, what kind of house, what kind of payment you're looking for, if you have a down payment or not. We're asking all the questions. Where do you want to live? All those kind of things, and trying to make the best plan from the best loan program, the best product. And just get to know them. And we in our business too, we're available 24/7, morning, nights, holidays, weekends. We're there. We're not going to be like that, the bank or the credit union or the one person that I'm here 9 to 5, and you're just asking, they're not really a loan officer. We're here to actually answer the questions and know what we're doing, not just getting paid hourly. We're here to help you and put you in the right products.
That actually brings up a good point or a question. What is the difference between getting a mortgage from a mortgage brokerage and a bank?
Well, we're usually, for when you're on the mortgage side, not in the bank, you're going to sell off to like Fannie, Freddie, which is conventional loans, and Ginnie Mae are government loans and stuff. And we're going to sell off to a servicer.
Okay.
So, and they're the ones handling the mortgage afterwards. We're a bank, and they're going to portfolio. So what that means is they're going to hold the loan into theirs, and they have their overlays. Let's say that. So an overlay is something like, well, you have to have this or that. You have to have this good credit score. You have to have this much down. You have to have this much assets. We're selling off to Fannie, Freddie, Ginnie, which what most people do. So that way, whatever, there are no overlays. So whatever, if you meet the parameters, you fall on those. Where they can pick and choose. The bank's like, nope, we want this customer. So they're gonna be like, okay, you got lots of income, lots of assets. We want you, so we're gonna make this deal to you and make exceptions. Where honestly, people with the lower credit scores and stuff, they don't want those, or the lower debt to income. They want like prime candidate, 800 credit score, 20% debt to income ratio. They're looking for that. Work. We take, if you follow the parameters of the lending guidelines, we'll do it.
Okay, so there's a lot more leeway with a mortgage broker compared to a bank.
Yes.
Okay.
I worked for a bank for 8 years, so.
Okay.
We know that. I know the overlays. I did not realize you could do as much. So I've been on this side for like 10 years now.
Okay.
There's a lot more you can do on this side than banks.
Is the rates that you're in general going to get from a bank or a mortgage broker, are they approximately the same? Are they higher, lower?
They're going to be pretty much the same. Everyone's going to have, it all depends on what they're going to do. You got to look at what you're doing. I always tell people, you got to compare apples to apples too.
Right.
Like for people like, hey, this person's offering this, they're offering 6% with 6%, and they think there's no loan fee or something. And we get the loan estimate. No, you're actually getting 6.5, and they're charging you 2.5 points or something. So you got to compare when you're doing that. You got to make sure, like, you look at their loan estimate. You got this loan fee, or there's no loan fee. Like I would say, look for the junk fees or the fees.
Right.
So you're really looking for loan fees, processing underwriting fee. If they have admins or application fees, we don't have application fees, those kind of things. But you just want to make sure you're comparing those. But typically, everyone's going to be different. Where the banks could kind of bend, like again, they're going to look for like the premier buy stuff. So they might offer you something there because they're loaning their own money. They're not selling off to where the investors, and investors are going to give you their pricing. You have to, price it where you can still make a little bit, but you're going to get the service. I will say that mortgage side is a lot better servicing. We'll get the banks, and we're available 24/7, not 9 to 5.
Right. Okay. Good deal. So there's a lot of products out there that people really just don't even know about. I was growing up, and what I was told growing up is you need 20% down on a house. You need to make this much money, and you need to have this kind of credit score. And that really kept me away for a long time from purchasing a home. Can you help us understand why that isn't, or what is the actual case now around getting a mortgage?
There's a lot of great programs out there and a lot of zero down. I mean, my favorite though is VA, that for our people that serve in the military. I mean, it's a zero down, no mortgage insurance. I mean, you get 580 credit score we did for people. The debt to income, it doesn't matter really, as long as you get approved eligible. There's great programs there. If you just serve in the military, there's other zero down. There's USDA, which is a rural housing, is a zero down. You have a down payment assistance, Washington State Housing Finance Commission. That's another zero down. You have FHA 3.5% down. You have 3% conventional programs. You got programs that do down at 580, where all the banks are like, no, we don't do that. Yours is 40, 660. You got to be, no, those aren't the guys. That's their guys. They have their overlays. We don't have those. So we sell to the Fannie Mae, Freddie Mac, the conventional, the Ginnie Mae or FHA VA. We have those programs. We have like the niche programs too that the banks are going to offer. When I say the niche products, we have something called, it's like a DSCR, like a non-QM, so non-qualified mortgage, kind of like a specialty program. We have programs where people don't even have to prove for self-employed, people are like, hey, you can't do loans, about place won't do this. We have bank statement programs for those, so like whatever you make showing on what you make a month and deposits, that's what you're going to get for your income. We also have an investor program that's huge nowadays. So they don't have to show any income. You qualify off what your rent is versus what your mortgage payment. So I'll give you an example. If your mortgage payment is $1,000 and you're going to get $1,200 in rent, good enough. You don't have to show income. There's a lot of programs out there that you don't have to show that. Granted, those are going to require more money down, like 40% or something. Don't get me wrong, but you don't have to prove. So there's basically no income loans. There's the credit scores could be lower. There's the zero downs. There's a limited down. So there's so many programs. Just you want to get with an expert, not the ones just I got this little box, you had to fit it. We have lots of different programs, and that's why we spend the time with the customers to see what they're looking for and ask the questions to make sure we get them the best product, the least amount down, the best rate, best payment, best everything.
Wow, that is really, really cool. You mentioned an investor program where people might get a mortgage on a home, and then they rent that home out, where the mortgage is $1,000, but the income that they'll make on rent is $1,200. And so you're then willing to give them that amount because you know the mortgage is going to be paid, and that $200 then becomes revenue for that person, right?
Right.
Wow. So is there and I personally want to focus on this little piece really quick because, I like to talk to people about how to generate wealth. And one of the things about America is the American dream. And part of that is purchasing a home, but also the people in this country who own real estate are the ones who we consider wealthy. That's really one of the ways that you generate wealth, and that you can pass that wealth on to your family and build something for future generations. So when we're talking about loans like that, is there a certain number that you can have out at one time? So let's say I saw five homes that were all potential rental properties. Mm-hmm. Could we then put together a program where each of those places is bringing in $200 over the mortgage, and then put together a package like that?
Yeah, you could do those. I mean, every house is going to be individually financed.
Of course.
But yeah, you do have those programs. The next thing is, you could actually have it where you're not covering the mortgage too. So I'll give you an example. Granted, you get the better rate, the less down payment. If you're getting, 100, you're over the, whether 200, 300, whatever, $100 doesn't matter. You can actually be under too. So say you're only $750, you're getting rent and is $1,000 payment. You can still qualify. Now, granted, the rate's going to be a little higher, but of course, you're going to still qualify for those loans. So there's a way, if it's sellable, those are like specialty program, but like the Fannie, Freddie, Ginnie, those are, if it's sellable to Fannie, Freddie, Ginnie, we're going to do those loans. We don't have the overlays. That's one thing of nice about our company versus those banks, credit unions. They're loaded with overlays. I worked there a long time. I know a lot of people that work there, so they're loaded. But the investor, getting back to your point of the investors, there are a lot of great investor programs out there. But yeah, you can do more than one. If you You want to do 5 at a time? Great. Let's do 5 at a time.
That's awesome.
Yeah. I mean, you obviously have to have the money down first.
Of course.
Typically, you're about 20% down. If you're going to do those, you're going to be like 20% down, which is still great for investment properties.
Yeah.
20% down, and only based off what you're getting for rent. That's an insanely good program.
That's a really, really good program. I mean, that is really one of those things that people don't know about. And I think education is obviously key. The more you know, I think that what this conversation has really helped me to realize is that what you do is educate people, and that you need to build a relationship with individuals to help them understand what they can and cannot do and how they could achieve the dreams and goals that they have for themselves.
Exactly.
That's really
Perfectly said. I can say that myself.
That is awesome. Kris, I really appreciate you taking the time to sit down with me, have a conversation. If somebody would like to get in contact with you, how would they go about doing that?
You could call me, text me, email me. My phone number is 253-232-6330. And my email address is Pisha, my last name, P as in Paul, I, S as in Sam, HA, @PRMG.net.
Awesome. Well, hey, man, it has been great talking to you. I'll also have his contact details pinned as a comment and in the description. So if you want to get in contact with Kris, that'll be one of the ways that you can do it. Again, it's been great talking to you. I really appreciate you spending some time educating me, educating the audience. Have a great rest of your day and have a great week.
My pleasure. Thank you.
All right, man.
All right.